Hello and welcome to another episode of Insurance Insights podcast, presented to you by your favorite brand, Policybazaar. We host this podcast with our experts every fortnight to help you make the smartest insurance decisions. If you are our first-time listener and haven't subscribed to our channel yet, please do it right away. Our podcast is also available on Spotify, Google, Apple, Amazon Music, JioSaavn, Hungama and Wink Music. You can listen to all our previous episodes on these platforms. This episode is dedicated to those Indians who are currently living abroad. NRIs or non-resident Indians often face a unique dilemma. While they spend a substantial part of their lives abroad, they often have plans of returning to the home country. And they keep working towards this goal by looking for the right investment and insurance plans. The most critical among these is a term life insurance plan. This is a must-buy for an NRI as it safeguards their family's future back in India, come what may. This is what makes it important for the process of buying term insurance to be smooth and NRI friendly. To tell us more about the latest updates in this area, we have with us today Sajja Praveen Choudhary, who heads term life insurance at Policybazaar. To start with, how has it become easier for NRIs to buy term insurance in India? Are there some rules of eligibility that one needs to keep in mind?
Basically, what has happened is that, during COVID, there's been a change in underwriting guidelines, and as a result, it's not only for regular domestic customers, but even for NRIs. The guidelines have been tightened earlier, where, the amount of cover that the customer can take has been reduced or been limited. And at the same time, the customer has been asked to undergo physical medicals, which was in itself tough in foreign countries where the cost of medicals is higher. And along with COVID, it became much tougher. Now that we're seeing kind of come back from the COVID period, the insurers have once again relaxed the guidelines and making it easier for NRIs to buy term insurance. Like instead of asking for physical medicals for quite some good cover amount, about 1.5 crore or 3 crore of a life cover, is being done just basis telemedicals, unless until the customer has some health issue. So all they have to do is you can apply online, make a payment online, and then there's a telephone call that happens along with the doctor, along with the verification, and post that the underwriting happens, and then you get a policy. So that's how it has become easier. Earlier it was like you could not get probably above 1 crore amount of cover, and at that too you had to undergo physical medicals, which was very tough. But now there are no physical medicals unless you have really some kind of a health issue. Otherwise, it's just about telephonic call along with the doctor and an application along with the premium payment, and then you get your term insurance. That's how it.
Thanks, Sajja, for sharing that with our listeners. My next question is, why is it a good idea for an NRI to have a term insurance plan back in India?
Most of the NRIs, if you see, they're a working population who's moved to abroad or other countries on a temporary basis of, say, they're going to work for next 5 years on some project, or, they're going to work for probably 10 years. And a lot of NRIs in UAE especially who've gone there to work, and probably they've returned back to India for about 15 years. And even during this period or after this period also, their dependents are going to be in India, and their dependents are in India. So let's assume tomorrow, why do you take a term plan? The basic premise is that in case of death occurring, then your family gets that 1 crore or 2 crore rupees, and they're able to live a good lifestyle that you would have wanted to give them had you been around. So the family being in India and the insurance company belonging to India, I think it's a very, very clear-cut thing in making it easier for them to get the claim amount and do the documentation and everything and coordinate. Unlike, let's assume you were in UAE, and let's assume, you've taken a policy from an insurer there, and, your family is here and they have to claim from a UAE company, or let's assume even when you've come back also, that's going to be very, very tough, right? So that's one part. And having said that, this being one, and the other big difference is that the term insurance plans that you get in India are much, much cheaper compared to those you get in other countries. In some of the countries, they're cheaper by as high as about, say, 60-70% also. And that's a lot of saving. It's not about just saving of money for one time, right? For the next 30-40 years, you're going to save that money. That leads up to a huge amount kind of. So on all fronts, whether it's about ease of claims or whether about saving money, it's always a good idea to buy a term insurance plan back from insurers in India.
Moving on, what are the top factors that an NRI should keep in mind while choosing term insurance in India?
So some of the top factors when we speak about for NRIs buying term insurance in India is that the first and foremost is you might want to figure out who will be able to provide you a term insurance plan, because not every insurer provides term insurance for NRIs today to the extent that you might want. So you might want to check, the first thing is what is the cover amount that you're planning to cover yourself for, and which all companies are ready to provide you, that too basis your income and education and occupation criteria, because some of the insurance companies have their underwriting guidelines where they do not provide, or they provide only after a certain income or above a certain education or a job criteria. So that's one part. And then you compare within those insurance companies, and then the second part is when you're comparing, you also look at who's asking for physical medicals and who's ready to do basis a telemedicals kind of a process, which might mean basic ease of issuance rather than going through entire physical medical process. And some of the companies in especially in some of the Western countries where the cost of medicals are higher, some of the medical tests might be required to be done by at your own cost. So that might be another factor that you might want to check out for. So one is which company is ready to give you for the cover amount that you want basis your parameters, and the second is which companies are willing to give you basis telemedicals and which requires physical medicals, what kind of medicals, and then you choose whatever you find the best among them.
So certainly one should keep in mind these factors before investing in a term insurance plan. My next question is, what would you say is the best time or age for an NRI to buy a term plan in the home country?
The best time to buy a term insurance plan, whether it's an NRI or a domestic customer, was always yesterday. The reason I say it is yesterday is because there are 2-3 main reasons for that. One is about the cost of a term insurance plan. How much would it cost you, when you buy it younger or when you buy it today versus when you delay it for the same, let's say you want to cover yourself till the age of 60. The other being the health condition that leads to whether you being eligible for a term plan or not at a later stage. So when you look at a cost, if you were to take some example, right, how does a term plan work? Basically, you decide what do you want to cover yourself for. Let's assume you are a 30-year-old, you want to cover yourself till the age of 60. So you're given a premium X, and this premium X remains constant for the next 30 years. So let's assume you wanting to cover yourself till age of 60, and you're paying X premium every year, which means into 30 years 30X is what you pay, versus let's assume you delay this by 5 years and you start to take the same amount of cover at age of 35 to cover till about 60 years, which means again you're going to pay for 25 years, but it is Y, the premium is Y do you obviously greater than X because you're starting later. Now 25 times of Y, you'd be surprised with the way the term insurance premiums have increased with time over the last 24 months. This 25 times what you or whatever you would pay in this 25 years to cover yourself for 25 years will be much higher than what you would have paid for 30 years to cover yourself for 30 years. So what basically it is that you're not only covering yourself, you're not covering yourself for 5 years, but also you're ending up paying a higher premium. So that doesn't really make sense, right? So you should always buy it at a younger age. The other factor being, unlike what used to happen in our parents' era, where diseases and health issues used to occur only with as you cross a certain age, these days you see that there are multiple health concerns that even come up at younger ages as well. So you really don't know tomorrow what's gonna come up at what stage. So it might really happen that tomorrow all of a sudden you get detected with some small health issue also, and that might lead to being asked to undergo additional medical tests or being asked to pay additional premium. The same term plan for the same cover might be costing about 1.5 times, or being declined also in some of the health conditions as well. So you really can't predict the future, right? That's a very awkward situation to be in. Either not getting a term plan, or you being required to pay a very high premium for the same kind of cover which you would have got probably say 1 year before or 2 years before at a much lower premium. And hence I say always the best time to buy a term insurance was yesterday kind of.
Lastly, Sajja, what would be your parting advice to an NRI who is looking for the right term plan in India and is listening to our podcast right now?
The basic advice, whether it's an NRI or a domestic customer who's trying to buy a term insurance plan, is that try and compare before you buy or you choose one, Because what happens a lot of times with insurance is that people also try to figure out what our friend bought or what our family member brought, and then end up buying the same thing. But what you need to understand is everyone's needs are different, everyone is different. So what you might want as an output benefit, that someone might want a lump sum benefit at the time of death for the family, versus someone who might have someone in the family who might not be able to use a lump sum amount in a proper way, and hence they might want a monthly income kind of thing on death as a death benefit. So there are very lot of different stuff like that, and then there are these add-on covers which might fit differently for different needs. And then there is obviously the underwriting criteria that insurance companies apply, whether a particular plan is whether you'll be eligible basis your basic demographics or not. So the first thing is compare what are the different plans available, what are the kind of features that are available in those plans, what suits you best, and then decide which plan do you think fits your requirement the best.
We are sure our listeners are very thankful to you for all these tips. Let's now move on to our next segment, the Policypedia. Here, we decode an insurance jargon for you. So today's term is life assured. This refers to the person for whom the insurance is bought. This may or may not be the same as the policy holder. For example, if you buy insurance for a parent and pay the monthly premiums for them, then you will be the policy holder, while the life assured will be your parent. With this, we have come to the end of our today's podcast. Please don't forget to like, share and subscribe. Stay safe, stay well, and see you again.